If you're watching NVTS right now, there is one question I think every investor should be asking before the next earnings report. Can Navitas Semiconductor actually deliver the growth the market is expecting? Because on the surface, things are starting to look interesting, but there is also something hiding underneath these numbers that could completely change how NVTS trades after earnings. And by the end of this video, I'm going to give you my own Q3 revenue prediction, my price scenario for NVTS, and the one number I'll personally be watching the closest. So let's get into it. Navitas Semiconductor is currently trading around the $10 area, and the stock has been extremely volatile. That's important, because this is not the kind of stock where you can simply look at revenue and say, the company beat estimates, so the stock should go up. NVTS is being valued partly on what investors think the company could become in the future. And a huge part of that story is AI infrastructure. Now let's look at the numbers. In Q2 2026, Navitas reported approximately $10.5 million in revenue. That was a meaningful improvement from the previous quarter. But here's where things get interesting. For Q3, Navitas is guiding for revenue between $13 million and $14 million. That means the midpoint is about $13.5 million. And compared with Q2 revenue, that would represent roughly 28% sequential growth. That is not a tiny improvement. That is the number that caught my attention. Because if Navitas actually reaches the high end of that guidance, investors may start asking a completely different question. Is this company finally entering a stronger growth phase? And that brings us to the first major risk. Revenue growth is great, but revenue growth alone doesn't make a semiconductor company a winner. Margins matter, operating expenses matter, and most importantly, the company still has to prove that this growth can continue. That is why I don't think investors should only watch whether NVTS reports $13 million, $13.5 million, or $14 million. The bigger question is what management says about the next quarter. Because imagine this, Navitas reports $14 million in Q3 revenue. That would be a nice result, but then management gives weak forward guidance. What do you think happens to the stock? Exactly. The market could completely ignore the revenue beat. Now flip the situation. Suppose Navitas reports around $13.5 million or even slightly below $14 million. But management says demand from high-power applications and AI data centers is accelerating. That could actually be more important for the stock. And this is where I think the NVTS story gets really interesting. Navitas is positioning itself around high-power markets, including AI data centers, energy infrastructure, performance computing, and industrial electrification. And the AI data center opportunity is probably the biggest part of the long-term story. Because AI models are becoming more powerful. Data centers need more electricity, and when power requirements go higher, efficiency becomes incredibly important. That is where technologies like gallium nitride and silicon carbide can potentially play a bigger role. But here is my twist. The market already knows the AI story. Everyone knows AI is growing. Everyone knows data centers need more power. Everyone knows Navitas wants to participate in that opportunity. So the question is not, does AI help Navitas? The real question is, when does that AI opportunity start showing up meaningfully in the financial numbers? That is the part I'm watching. Because if the company starts showing consistent revenue acceleration, the market could begin valuing NVTS very differently. But if the AI story remains mostly a future opportunity while current revenue stays relatively small, investors may continue to punish the stock for its losses. And there is another thing I don't want to ignore. The company reported a very large GAAP net loss in Q2. So this is still a high-risk growth story. That means I would personally not look at NVTS as a safe semiconductor investment. I would look at it as a high-risk, high-reward opportunity. Now let me give you my own Q3 prediction. If I had to put my money on one number, I would estimate Q3 revenue around $13.5 million to $14 million. Basically, I think Navitas has a realistic chance of landing close to the upper half of its own guidance, but I don't think that automatically means the stock will explode. This is where my price prediction comes in. With NVTS around the $10 area, my near-term base case scenario after earnings would be roughly $11 to $13 if the company delivers around $13.5 million to $14 million in revenue and gives investors encouraging forward guidance. That would be my realistic bullish scenario. But there is also a more aggressive scenario. If Navitas beats the high end of guidance, improves the margin story, and gives investors stronger evidence that AI data center demand is translating into actual orders and revenue. I think NVTS could potentially push toward the $14 to $15 area. Now, I'm not saying $50 is guaranteed. It isn't. This is my scenario-based opinion, not a promise. And there is a bearish scenario that investors need to understand. If revenue comes in below guidance, margins disappoint, or management gives weak forward commentary, NVTS could easily fall back toward the $8 to $9 area. And because this stock is volatile, I would not be surprised by a very sharp move in either direction. So what am I personally watching? 3 things. Number 1, Q3 revenue. My target is around $13.5 million to $14 million. Number 2, gross margin. Because revenue growth without improving economics isn't enough. And number 3, probably the most important one, management's comments about AI data centers and future high-power revenue. That's where I think the real story is. Now let me ask you something. If NVTS reports around $14 million in Q3 revenue and gives strong Q4 guidance, do you think this stock can reach 15s? Or do you think the market has already priced too much of the AI story into NVTS? I really want to know what you think. Put your NVTS price target in the comments. Personally, I'm cautiously bullish going into the next earnings report, but I would not call NVTS a low-risk investment. The upside could be significant if the revenue acceleration continues, but the downside could also be painful if the company fails to convert the AI opportunity into real financial growth. And that, in my opinion, is the real NVTS story. Not whether the company can simply beat one quarter. The real question is whether Navitas can prove that the growth we're seeing now is the beginning of something much bigger. And if that happens, the current $10 area could look very different a few quarters from now. But if it doesn't happen, that's where the story gets dangerous. So now I want to hear from you. What is your NVTS Q3 prediction? 13 million? 14 million? Or do you think Navitas can actually beat $14 million? And where do you think NVTS will trade after earnings? 8, 12, 15, or even higher? Let me know in the comments. And if you found this analysis useful, hit the like button, subscribe to the channel, and turn on notifications because I'll be covering the next major NVTS developments and earnings update. And remember, this video is my analysis and opinion for educational purposes, not financial advice. Do your own research before making any investment decision.